What's up YouTube, it's Louis here, I hope you're well. Today we're looking at Quant on the daily time frame. I just want to thank you all for the continued support on the channel. Thank you for the increased amount of likes. I really do appreciate it. It does bump up the algorithm, so continue with that, as well as thank you for all the lovely comments. And yeah, do check out those memberships. Thank you again, Tolly, for the super thanks. Again, if you want to send in a chart request, you can do so if you're a member or through the super thanks. Remember, over the last few days, we've been expecting Quant to actually continue lower to eventually fill in this wick down here. That's what I'm expecting eventually. Now, we can go up, but I've already explained in the past that any push upwards is going to result eventually in a dump. Since we've made a lower lows for Bitcoin, we had a higher low for Bitcoin. Of course, we've been covering other alts on the channel, but I've always been reverting back to Bitcoin in all those updates every single day, saying that as long as Bitcoin was holding above 18.6k, that's a higher low which should never have been formed, and we keep holding that as support. So as long as Bitcoin is doing so, it's going to allow everything to be bullish. So the moment that Bitcoin loses 18.6k, everything should flip bearish. Now for Quant, we were saying since tapping this old trend line that we had since December last year, so we were saying that we were going to get a reaction from it. And luckily enough, I was able to tell you from that point exactly at $230, and especially with that weekly close as a shooting star, that we were going to come back to the bullish crossover here, which I said we must hold. Ever since we broke out over here, I was saying Quant is now weekly bullish, so we can expect to go up for some months now. However, when we eventually come down, and luckily enough I was able to tell you the exact moment we were going to head down, I said at all costs it must hold to confirm this weekly change, the weekly change in trend from a bearish trend into a bull trend, or a bear market into a bull market on the weekly time frame, which means for months and months and months we should be going up, as 4 weekly candles would add up to a month very quickly. Do you understand? So we're going to be going up for months as long as you can hold this, and we'll continue up. But unfortunately, I think we got a daily close over here. Oops, we got a daily close over here below, and at that moment I said we've actually invalidated going up. And now even if we pump up, we're just going to run into resistance, which we saw the direct next day. So even though we reclaimed the 200 EMA, we already saw the weakness the day before with the wicks going up in an area 2 days before we had wicks going down, and here maybe a few weeks prior, wicks going down, showing that it was support. But luckily enough, over on Twitter, as soon as we got this daily close, so make sure you're following my Twitter. That is also where you can private message me about the education, which is currently discounted. I'll talk about that more at the end of the video. Let's carry on with this. So I was saying that as soon as we got the daily close, big wicks get filled. So that's what we were expecting. We needed to see a daily close the next day, this red candle above the 200 EMA to signal that we are going to continue upwards, and we'd need the weekly close at the end of that week. And this was a Wednesday, so we'd need the weekly close on Sunday to close back above this white line, because it's in line with the inverse head and shoulders neckline, as well as the weekly 55 EMA. So this is why this was such an important location. But yeah, as soon as I saw this red candle closing below, I was able to tell you guys now $430 is not happening in the short term. It means that, yeah, the bet essentially, guys, if we go to the weekly, it means that this move up here was fake. It's a bull trap because you've fallen back under the EMAs. The only way to invalidate this bull trap, the only way to make this a bear trap, is if you're reclaiming this level first. So you need to close above 130 to 100, as well as the psychological level, but we know this area is much larger than just that. We've got a wick up here at $168. If we zoom into the daily time frame, this was the actual M pattern or descending triangle, which I put as the title of one of my videos a few weeks back. We were saying, yeah, we're just seeing weakness over here, as a lot of the quant maximalists on or the quant cult on Twitter were saying, oh, look, guys, we're above, we're gonna, invalidate the descending triangle. No, we need to wait for the daily close, because this is the daily time frame. So if you're doing any analysis on this, the current candle doesn't matter. You have to go off the last candle. So yesterday, when we were on this candle, I was saying we've already confirmed this as resistance, so we should continue lower. So of course we need to wait for this, because if we do close above the wick here, it's a signal we want to push up into this gold zone. But realize this gold zone is key resistance. You got your bear market box. You got this, which you couldn't close above anyway. You got the 20 EMA. You got your bear market box. You got your 55 EMA. You got your fib levels here, which is the golden pocket, also key resistance. And then also you've got your descending triangle neckline. So for me, if you want me to believe we are actually going to have this continuation upwards, I need to see a reclaim of where this descending triangle began. I need to see that flipped into support. I need to see a miracle push like this, a God candle or something like that. But this is not what I'm hoping for, what I'm waiting on. I'm not waiting on something that's not what should happen. Because when you have when you use Fibonacci's, I have the top of the move and the bottom of the move. Oops. I have the top of the move and the bottom of the move down here. I only know this is the bottom of the move because we've already started coming up. So you have to wait for the wicks. That's the signal. So now I know I'm coming up. I can come up to 160 and still get rejected and go lower. And you can see that would be like a right shoulder. This would be your left head and right shoulder. And when we take a look at it on the weekly time frame, you can see it. It's a bit ugly, but you can come up all the way to here and still create a right shoulder essentially. Pardon me, guys. It's very messy now, but do you guys get that? So I hope that was clear for you today. We're not done just yet. I'll get some more recent fibs now. I accidentally just deleted the fibs I needed, but that's fine. We've got the golden pocket to show us this is a key resistance anyway, and regardless of that, we know we need to flip it into support and break above 168 because that's where the FTX nonsense happened. That's where we started going down. If I get you some more fibs, because at the moment this is the top of the move at the moment, so I can measure from here to there. This would support you. So wherever these candles are closing, the daily closes of these, there is some support there right now. Nice psychological level, $100. So that's essentially because we closed above $100, which is an amazing psychological level. We did go below, but we're seeing the daily close above it. That's why it's giving us this push back up. But every $25, like 100, 125, 150, 175, they're all psychological levels. So that's why you're fighting with 125 now. That is your key resistance, lining up exactly with the 200 daily EMA. So you're trapped between support and resistance with those, at the moment between here and essentially there. And we're trading between here. And your 100 is keeping you up, is what could potentially send you into this golden pocket. But remember, understand, this is a resistance. This is your push. This is your exhaustion. This is your continuation. You can create a reversal wave, but it's not what should happen. So that's why I'm not sticking a bias out, because that's not what should happen. What should happen is further continuation downwards since you started making lower lows. Also, guys, this was a resistance, so really you should be holding that as support, and if not, you come back down to here. And so when we do actually come up, you have to understand this resistance. So even if we come up, it's resistance, so it's gonna send us lower. It's just we got some levels of support holding us up. Again, here, that's what could send us into this zone. But once we get rejected here, that's what's going to have to hold you up. If that doesn't hold, you're coming below. So what looks like a stronger level what looks like a stronger key level, this big block of resistance or this tiny $100 support at the moment. Once you lose 100, you go down to 83. This is a big F off support, so that's going to be hard to break below. So I'm going to be expecting a lot of bounces. We could be consolidating between 75 and 170, this fat area over here, for a long time. I have no clue, guys, because again, we've just bounced off this. So you're first coming up, we've just found this new support at $100. That's what could send us higher. Then this is a key resistance, so you're going to get sent lower. This is a support, so you're going to get sent. Are you going to make a high or a lower high, then go lower, flip into resistance, come down, bounce? It's going to take a long time, guys, but I'll be here step by step. We'll just keep using the fib, look out for patterns. And yeah, I hope you guys found a lot of value in today's update. If you want to donate to the channel, check out the super thanks, where you can also chart request. Check out the new membership levels as well. I want to be doing a fan show where I bring you guys on and we can debate and whatnot, look at your charts. And yeah, if you're interested, just let me know in the comments down below. I have one-to-one mentorship that's currently discounted at the moment, as well as my course. The course is 50% off. It teaches you from zero knowledge into a self-sufficient trader. With both of these offers, you do actually get my Discord group chat with my personal moves, what I'm doing with my cryptos, which cryptos I'm in, and yeah, what I'm doing going forward, and just more detailed thoughts in the market. There are, of course, member exclusive videos for that are more detailed here, more future targets for Bitcoin to the downside. If you're interested, of course, that's all free through my education. The course is 50% off, and the mentorship is also discounted. So if you want to take action, that's all over my Twitter, Louis_crypto. Thank you guys again. Like, subscribe, and comment, and peace.